So, Facebook, is it a buy at these prices? I mean, it's down a lot. Numbers are quite phenomenal, but there are risks. Now, this video will show you the opportunities, but also the risks you need to be aware of if you're considering putting some money into Facebook. Let's get started. So look, it's not an easy market to invest in right now. Markets are kind of weak, so you got to look for the companies that are undervalued with great fundamentals and a great growth prospect. Not an easy find. I mean, you can look at companies like Google, like Microsoft. They're definitely in that category, but Facebook might be another one of those companies. Now look, it's also kind of dangerous right now to trade in general because, I mean, a lot of speculators love this crazy volatility, so they create this chaos of a market. So I just want to warn you to be careful because there's going to be a lot of short-term volatility, a lot of speculators warping the market. Obviously, if you're stepping in as a long-term investor, you got to ignore all this noise. Look at the fundamentals of the company. Now, just a few months ago, Facebook was trading at $320. Ever since then, they only gotten better. Look at the financials. However, the price went down to the $200. Now, that creates an opportunity, but it's not without risks. Now, first of all, let me show you the fundamentals. Right now, the company is trading at 4 times sales. That's not a lot, considering the fact that everything else across the board is pristine. I'll show you in a second. They have great free cash flow. Operating margin is insane. They're actually insanely scalable, and they don't have a lot of risks internally as far as expenses and growth. Look at their operating income. It's growing like crazy. $6 billion 6 years ago, $47 billion in 2022. Look at their revenue versus cost of goods. It's about 6x, and it doesn't change. When they did $18 billion in revenue, the cost of goods was 3. Now they're doing 120. The cost of goods is only 23. And as you can see, the gap remains. They're a very scalable business, as it should be. Now, does the business generate cash flow? Woo! You want to talk about cash flow? $5.5 billion in 2015. Now, 6 years later, $30 billion in free cash flow. Now, it's a company that's trading at 4 times sales with $30 billion in cash flow. Now look, cash versus debt, $16.5 billion cash, $14.5 debt, net cash positive. Check, right? What else do you want in the company? Cash versus liabilities, 16 versus 41, about 40% cash of liabilities. Assets net of goodwill versus liabilities, 145 versus 41, 3.5 times more assets versus liabilities without goodwill. And look, the company doesn't have any crazy expenses. They're monetizing traffic that is based on user-generated content without any competition. In fact, their only risk internally might come from antitrust issues because of the fact they don't have any competition. But I think that ship sailed a long time ago. I don't think the antitrust authorities, especially in North America, are going to go at Facebook at this stage. Now, looking at the company from a broader perspective, there are risks that you need to be aware of, despite the phenomenal numbers I just showed you. First of all, you have to understand that Facebook is extremely sensitive to currency risks, to Forex. Facebook is a global business. It's not heavy North America. It has a lot of income that's coming from abroad. And as you notice, recently the dollar, somehow, God knows why, is getting stronger and stronger. That means they're getting less and less money from their foreign geographies where they're operating. Now, at the end of the day, it's not going to kill Facebook, but it's definitely going to cut into their efficiency. Now, the other thing you have to remember, if we are headed to recession, if we're going through inflation, increased rates, and then eventually recession, and that seems to be a global thing right now going on, especially with the geopolitics, China lockdowns, commodity crisis, food crisis potentially. If we're going through some bad times, discretionary spending is going to go down. Advertising spending is going to go down, at least in the first stage. Companies that rely on ad revenue are going to take a hit. And Facebook is not immune to that. And you have to remember that when you factor in these beautiful numbers. So before you decide to either invest or don't invest, first of all, do your own research. This isn't financial advice. I mean it. I'm just a dude on the internet. Make sure you talk to a professional because this is my opinion. Might be inaccurate, might be wrong, might be the complete ramblings of a madman. Talk to an advisor. And if you decide this company is for you, great. And if not, also great. Stick around. We have more stuff coming up real soon. See you in the next video.